The Nigerian Investment Promotion Commission has said that investments into the country has fallen to $1.69 billion in the second quarter of this year from $8.41 billion in Q1. This shows a decline of about 80%. In a report, the NIPC said that the total value of investment interest in the first half of this year fell by $1.57 billion to $10.11 billion compared to the second half of last year. The figure is, however, $5.05 billion higher than that of the same period last year. A co-managing partner of Commercial Partners, Tosin Osunkoya, said that long-term foreign direct investment, that is more of that, will help to contribute to economic development in Africa's largest economy. Osunkoya noted that Nigeria needs FDI that will, in the long run, boost the critical development of the country. So what's causing the fall in FDI? What needs to be done to increase it? Is Nigeria's investment climate what it should be? We'll get into all of this today. Our focus is improving investment in Nigeria. I'm Tolulakwe Adeleru Balogun. Welcome. This is Business Edge. Now joining me is one of the co-managing partners of Commercial Partners, Nnamdi Nwizu, and he is, of course, a regular here on Business Edge. We'll get into the conversation with him. Nnamdi, good morning and good to see you once again. Thank you for joining me.
Good morning. My pleasure.
All right, so let's start off this conversation by looking at what foreign direct investment can do for a country, what its impact generally is. So what role does FDI play in an economy or in economic development generally?
So we are, FDI is foreign direct investments, first of all, basically talks about funds and monies that come in that are going to stay long-term in the country, right? So if you were to look at, say, an investment in a power plant in Nigeria, that would qualify as FDIs versus FPIs, which is foreign portfolio investors. So FPIs tend to be hot money, people who typically come in and invest in things like treasury bills, bonds, they're coming for equity play on the NSE. So, I mean, the difference is that FDIs, they come in and they help build your economy, they help with infrastructure development, and they basically tend to stay long term. So when those funds come in, those funds support the economy for a much longer period, unlike FPIs, which basically go with the trend and go with the flow. So when things are good, interest rates are high, they come in. Once you have a small shock to the global system, they tend to take up and disappear from your economy.
And that might be what we're seeing, but we'll get into that. So specifically, when we bring this FDI conversation now to Nigeria, how has the country benefited from FDI? What has foreign direct investment in particularly done for the Nigerian economy?
Well, I mean, we can see it everywhere. If you look at, use an example, LNG, which is one of the biggest gas projects in the world, we know that a big chunk of it came in from FDIs, right? So that's a portion funded by the foreign investors versus the portion that Nigeria brought in or Nigeria contributed. So that is an example of where and how you can see the effect of FDIs. If you look at things like the telecom sector with the likes of FTN and Co., those are things that you can classify as the FDIs. So basically come up and they stay long-term and they help with infrastructure development. So, I mean, those are some examples of how we have seen the effect of FDIs. And I mean, we continue to see their flows on an annual basis, maybe roughly about 1 billion plus a year coming in. Naturally, it should be a lot more, but those are the kind of levels that we're seeing for now.
Wait, so you're saying naturally it should be much more. Why should it naturally be much more for Nigeria?
Well, if you look at the size of the Nigerian economy and look at the GDP, look at where we are as a country, then one would expect to have, a lot more flows than that. If we are to look at the index, right, and look at some of the countries in the index, we would see that other countries seem to have a lot better performance than Nigeria does with regards to FDI flows, if you're looking at it with regards to Africa. So Look at the Africa Infrastructure Development Index. The list countries like Seychelles, Egypt, South Africa, Mauritius, Tunisia, way above Nigeria. Nigeria comes in at number 24. So that tells you, considering the size of the Nigerian economy and considering, the fact that we are the biggest black nation in the world, one would expect to have a much higher, much larger inflow with regards to the FDIs.
And that's a valuable point because there are many that believe it's not all doom and gloom for Nigeria, that the fundamentals are still good. As you mentioned, the relative size of its economy, large population, mostly young and tech savvy as well, and especially a strategic location, which makes Nigeria a good staging point to reach the rest of West and Central Africa in terms of markets. Are we fully utilizing these, I guess what we say, maybe basic market fundamentals to our advantage?
Well, obviously not as much as we should. If not, wouldn't be number 24 on the index, the Africa Infrastructure Development Index, if we were. On the technology side, I know Nigeria has been doing pretty well. We've seen quite a number of companies raise money in the Nigerian technology space. So on that front, I would say we are doing pretty well. But looking at other sectors, and part of the issues that we have seen, things like failure to honor agreements signed, or maybe agreements signed hastily with suspicious intentions in the past. And examples are abound. We've seen a few companies take Nigeria to court. We have all sorts of court cases pending in international court cases around us, refusing to honor questionable contracts that have been signed in the past. So if you look at that and also look at things like the insecurity, look at the currency situation, you would understand why you can see we're not fulfilling our potentials around that, and why you see foreign investors a bit hesitant to come into the country.
True. So let's look at the sectors or the areas of Nigeria's economy that tend to be the usual targets, because right now with this 80% fall from one quarter to the next, they're going to be the ones to feel the crunch, and we might see some knockdown effects coming from that. So you've mentioned electricity. We've talked about electricity in this conversation. Agriculture, even though it may not bring in the most amount of money for now, it is employing the most amount of Nigerians. What other sectors do we see are the sectors that have the most interest for foreign investors into Nigeria?
Well, I already mentioned technology, and we've seen quite a bit of flow going into that sector. The likes of Flutter and Co., who recently have raised substantial sums of money. So from that perspective, we've seen quite a bit of interest. We also continue to see interest, I think, that can capture the Nigerian retail sector, because we know that we have a huge population. And any product that people see that can get the retail sector largely involved, then I think we'll continue to see quite a bit of interest from the foreign investors.
All right, so let's look at these recent numbers that I've made mention of. So investment in Nigeria fell to $1.69 billion in the second quarter, just a difference of how many months from $8.41 billion in Q1. Do you think this is a holdover from the economic regression we saw because of COVID-19, or is there something else at play here? And then again, when you look at the ranking of Nigeria, as you said, on that list for the African continent, the largest economy, youth population, we should be in the top 5 if we're not even in the top 3 as it would be. So what do you think is accounting for this decline in such a short time?
So, first of all, I'm sure most of these countries are seeing quite a bit of decline considering COVID-induced economic situations. So it's not surprising to see a drop. But if you're asking with regards to Nigeria, I already listed some of the issues or situations that I see. One major thing continues to be the insecurity. When you hear cases of people being kidnapped, bandits demanding for all sorts of ransom and seeing it get paid, it's difficult to travel by road from here to other parts of the country. Those are not the kind of things foreign investors like to hear. So some of the things that always play in their minds is always security and liquidity in terms of being able to take their funds out if need be. So when you have a situation where even taking out dividends has become a bit of a problem, then it explains that. Let's even look at, even if you look at agriculture, a lot of people or government has placed quite a bit of focus on agriculture, but I know a few people personally who have been affected by the insecurity in that sector and have had to abandon their farms. And people who have done large investments from their own perspective and have all had to pack up shop and leave, and they're waiting for a security situation to improve to see if they can go back into their farms in those areas. So if you see things like that and you see how much gains the bandits are making, then doesn't look attractive to foreign investors who would want to come in. And this is part of what makes Ghana, seem to be a better destination than Nigeria in the recent years.
All right, Nnamdi, we're going to take a break, but when we come back, we'll look into how some of the states in Nigeria are performing. And it would surprise many people that Lagos is not actually top on the list of states as destinations for foreign direct investments. We'll also, of course, touch base with how to change things around. An 80% drop from one quarter to the next. How does Nigeria address this issue in a major, major way for its economy? This is Business Edge. There's more right after this. And today's Business Edge is looking at improving investment in Nigeria. Still with me is the co-managing partner of Commercial Partners, Nnamdi Nwizu. Now, Nnamdi, let's look at some of the states that seem to have been doing quite well when it comes to Nigeria. The numbers say that Bayelsa and Delta states attracted the most investments out of the 14 states that were listed, with $3.60 billion and $2.94 billion respectively. Then you have Akwa Ibom with $1.40 billion, while Lagos is number 4, on the list, with $0.70 billion, with a total of while a total of $1.45 billion was then split with 10 other states. What's happening in these states, particularly in Bayelsa and Delta, that's attracting this investment? And many might actually assume that this investment, the majority of it should be coming to Lagos. Is there something else going on with Lagos that's also not bringing that investment here as well?
Well, I would look at two things. First of all, the investments seem to be in the Niger Delta areas, south areas, where we know we have quite a bit when it comes to petroleum, type structures or petroleum type projects. So I won't be surprised if those projects are largely linked to the crude oil sector. If you look at Lagos State, considering how they were impacted with the last EndSARS and the knock-on effect that we've seen, it's not surprising to have seen a slowdown, and also considering that states like Lagos were hit a lot more by COVID than a lot of the other states. Lagos had one of the largest, if not the largest, when it comes to recorded cases. So not surprising that you see a bit of a slowdown.
All right, I want to bring you back to something. So when I asked specifically about that 80% decline from Q1 to Q2, insecurity was top of your list. But many people might find it hard to believe that insecurity alone is responsible for such a large drop. So I want us to further interrogate that. Beyond insecurity and some of the regulatory issues that we'll get into after this, what else? What else in one quarter to the next? And while we agree that there should be an overall decline that African countries are seeing, it's still just a very concerning drop, in particular for Nigeria.
Yes, so it is a concerning drop, and it is a huge drop. Beyond insecurity, we continue to see lingering issues with regards to liquidity and FX, right? And I'm sure if we break it down in the first quarter, we'll most probably see one or two huge transactions that came in that led to that huge jump or that spike that we see in the numbers, and possibly things normalize. So if you have a few projects, being chased, and you finally close them, and those inflows come in at the start of the year in Q1, then naturally, when you look at the figures and you compare them with Q2 figures, they'll tend to look a lot lower.
Okay, so repatriation of funds, the insecurity situation. Let's talk about the turnaround, if it is possible. So there are those who believe that there are little to no barriers when it comes to investing in Nigeria, particularly in most sectors of the economy. And we know that the country will need the investments in a very serious way in the coming years. But we have issues with laws and regulatory issues. We've seen situations where states will wake up and make a law or regulation that unfortunately, indirectly, can be seen as a way of telling somebody to come and be going, come and pack your bags and leave. And those situations always, of course, another investor that's looking into investing in a state or into the Nigeria will say, this is not somewhere I want to be. Are we adequately addressing the regulatory and legal issues? Because when we talk about it, we'll hear from the presidency that ease of doing business is much better. But this is not just about the numbers on a report that comes out every year. This is about doing business in the country, even with domestic investors as well, and even small and medium-sized enterprises. What about the legal and regulatory aspect of this?
So definitely something that needs to be looked at. I had mentioned earlier during the course of the interview that we had a few court cases, international court cases, where, Nigeria supposedly breached some parts of the agreements that were signed with the foreign investors. And also, when you look at some of these agreements, they also looked a bit questionable, and so looking at that, you now start to ask yourself, even from a legal perspective, when these agreements are being signed, what the process do we see, in terms of ensuring that things go smoothly and are well read and well analyzed before they're signed. Then if you look at it from a regulatory perspective, let's even look at the lawmaking process, and we look at the PIB bill that was passed recently, and reading some of the stories from the National Assembly, there seem to be complaints around how it was passed, how some of them were not really given an opportunity to analyze and review the agreements. How recommendations were made from the committee set up, and they were not taken up by the larger house. Some will tell you the voice votes didn't really reflect, or the count for the voice vote or the final decision didn't reflect what the actual votes were. So, and then let's even look at how long it's taking for the PIB bill to pass through both houses. I mean, this is something we've been on for maybe 6 or 7 or 8 years or more. So the slow pace of regulation, and then when it finally does come out, you have it being questioned by a lot of people. So you ask yourself how well they carried people along, or do you have a few people who have come together and basically try to enact regulations policies that would favor, just a few people. So a lot of those things naturally would, question the process. And if you don't get some things right, you've waited for the PIB bill to come out for years, and if finally it comes out and it doesn't address, to a large extent, a lot of issues raised, then you might not see the effect you expect, and then that takes us back to the drawing board all over again.
Very true. All right, Nnamdi, as we wrap up, let's talk about what we're expecting in the next quarter to come out. That 80% drop, do you expect a decline to continue? Do you expect that we're going to hold basically level at where we are right now? Or do you think that there will be some kind of turnaround? The world is opening back up. We're seeing more vaccines come out, but unfortunately, we're also seeing the Delta variant as well. Lagos State is recording more numbers. Other African countries are also recording more numbers as well. So there's still the COVID fight happening, and how that will play into the numbers. So what are you projecting for the next quarter?
I don't expect to see any jump in the figures. Nothing much has changed between Q2 and the quarter that we're in right now. If I look at, considering the fact that most companies or most investors tend to do the analysis for the year and take the decisions as you go into the new year. So most of them, would spend time, working on projects and then start to invest as the year starts. So even if you consider the fact that you've gone into a summer period where a lot of people tend to take their foot off the pedal, and you don't see a lot of people in the offices in the more developed countries, then you don't expect to see a lot of transactions getting closed. I mean, they take summer vacations a lot more seriously than we do over here in Nigeria. So you wouldn't see a lot of people, decision makers, even in the office, looking to close these transactions. And then Also, considering the fact that for a lot of them, their budgets and transaction, book would have been decided last year, and then they're trying to implement that this year. And then for this year, you now start looking at, new transactions possibly for next year. I don't expect to see any huge, any jump in the figures. And then maybe by next year, we'll start to see numbers hopefully start to increase, hoping that this Delta variant gets put under control.
Very true. All right, Nnamdi, he was a co-managing partner of Commercial Partners. Thank you so much for joining me on Business Edge.
My pleasure. Thank you for having me.
All right. And there we have it. Issues around insecurity, repatriation of funds, as well as some regulatory and legal issues could be holding back Africa's largest economy from adequately getting in the numbers of foreign direct investments. And we also have to wonder, those who are directly in charge of these aspects of the economy, how are they addressing these issues? It's a continuing conversation like many of the economic and financial conversations happening here across the continent. What we will continue right here on Business Edge is NC4 to watch, and that comes up right after this. And here are a few stories we're keeping our eyes on. The world's biggest platinum miners are ramping up plans to build a renewable energy plant for themselves to free them from power outages that have plagued South Africa for more than a decade. Sibanye-Stillwater, Impala Platinum Holdings, and Angola American Platinum said they plan to scale up solar and wind farms for their own use to cut reliance on state-owned utility Eskom, some of whose aging coal-fired plants have failed to keep up with the country's electricity demands. Kenya's foreign exchange reserves dropped to the lowest level in July after consistent growth in the past 4 weeks. The forex reserves, which are often used as a shield against foreign exchange volatility, declined to $9.371 billion last week compared to $9.621 billion the previous week. And this comes from data from the Central Bank of Kenya. The country has the largest stockpile of foreign currency reserves in the East African region. The current reserves are sufficient to cover just a little over 5 months of imports, above the bank's requirement of at least 4 months of import cover and the EAC's requirement of at least 4.5 months. Bitcoin has soared on Monday to approach $40,000, a rally some attributed to traders existing bets on declines, as well as ongoing speculation over Amazon's potential involvement in the cryptocurrency sector. The largest crypto rose as much as 15% to $39,681 before paring some of the climb to trade at about $38,100. Other virtual coins also rallied, including second-ranked Ether. Now, last week, Amazon advertised a job vacancy for a digital currency product lead, stirring speculation it might accept digital coins for transactions. And finally, the Purchasing Managers Index has revealed that the Nigerian economy contracted in May, according to data obtained from the Central Bank of Nigeria. The personal statements of some members of the Monetary Policy Committee indicated that the PMIs for the manufacturing and non-manufacturing sectors contracted in May. The CBN's MPC starts today, and as usual, we will keep you posted on all of the decisions made there. And that brings to an end this edition of Business Edge. Thank you so much for joining us. You can, of course, follow us on all of our social media platforms, and you can subscribe to our YouTube channel so you don't miss any of the business and economic conversations from here on the continent. Don't forget that we are live on StarTimes Channel 273. I'm Tolulokwe Adileru Balogun. I'll see you again soon.